Welcome back. You're still tuned into Midcap Radar, and SBI's numbers, they are trickling in. The NII has come in at 41,620 crore rupees, which is absolutely in line with the poll of 41,623 crore rupees, if I got the number correct. The net profit is higher than the poll, 18,331 crore rupees. That compares with the number that we had of 15,426 crore rupees. So it's a higher profit number that we are looking at for SBI. The stock has recovered sharply from the lows of the day as well. We'll have to see what the internals are like. It'll be very important to look at that, the detailed number. Do remember that this time around, the expectation was that the deposits growth will be lower than the system on a YOY basis, and advances growth is expected to remain healthy, where Motilal Oswal is estimating advances growth of around 15.8% on a YOY basis and 3.5% on a sequential basis. The gross NPA has improved on a sequential basis to come at 2.13%, which compares with a number of 2.21%. So far, it has been better than what the street was working with in terms of profitability. NII is absolutely in line with estimates, and gross NPA, the asset quality, has improved on a sequential basis as well. In fact, we have Dnyanada Vaidya of Axis Securities joining us on the phone line now to get his first reaction, and then we'll get in Abhishek as well with his take on the numbers. Mr. Vaidya, much for joining in. Well, Ms. Vaidya, sorry. We have the first initial numbers. What you made, the profit number is a beat, the asset quality has improved, NII is largely in line with estimates.
Right. Hi, good afternoon. The numbers for NII seems to be in line, driven by possibly a delivery on expected lines in terms of credit growth, about 15-16 odd percent. Margins we expected to contract marginally by around 5 basis points, and that could possibly be in line. The beat is mainly on non-interest income, which seems to have come ahead of our expectations, and that has resulted in a beat on the cost. I'm sorry, I cannot see the credit cost numbers, but PAT numbers seem to be ahead of our expectations. So overall, it's a good set of numbers. But even in terms of asset quality, the bank has delivered a good performance with a sequential improvement. Slippages number is something that we would want to see.
As pointed out by you, the provisions have declined on a sequential basis on the NPA front. So annualized credit cost has come in at 0.38% when compared to 0.48% in the previous quarter. One of the lowest annualized credit costs that you are seeing in the banking sector, given the fact that there are discussions going on with respect to unsecured credit coming in for, becoming NPA in this quarter. Operationally, it's a strong quarter, 50.9% YOY growth on operating profits and about 10.8% on a sequential basis. The NII largely in line with what our poll had suggested. The other income has grown robustly. So the other income has come in at 15,271 crore, which is a growth of 41.5% YOY and about 36.8% sequentially. Remember that, treasury income has been very strong for SBI over the last few quarters that I have seen. Over 2,000 crore quarterly run rate they have been able to sustain. So it might be that treasury gains is good over here. The OPEX has declined about 10.5% YOY, which is heartening to see. The employee expenses, that's aided the cut in OPEX. So employee expenses are down 21.8% YOY and about 4.3% sequentially. Hence, the operating profit growth is really good. The credit cost is on the lower side, and they have reported nearly 19% more profits than our poll on account of two key factors: the other income, lower OPEX. Asset quality has improved in absolute value. Gross NPA is down 1%, net NPA is down about 6% on a sequential basis, which suggests that their PCR or provision coverage ratio might. And we can also see from these numbers that slippages might have reduced on a sequential basis because provision for NPA is down. So slippages might have declined. Coming on to the business momentum, deposit growth on a sequential basis is very strong. At this pace, it has grown at 4.4% quarter on quarter. So the deposits are really strong. On a YOY basis, they have lost a bit of market share, but it's better than what analysts did estimate. So they have grown deposits by 9.1% YOY and about 4.4% sequentially. Analysts like Motilal Oswal was estimating around 8.7% growth YOY on deposits and about 4% on a sequential basis. So the deposit momentum is really strong, and currently, if you check, the rate of interest is higher on the deposit side. Still, they have been able to, meet the NII estimates of analysts. Advances growth pretty healthy, but lower than analyst estimate. It has come in at 15.3% YOY and about 2.9% sequentially. Now, analysts like Motilal Oswal was working with a number of 3.5% growth on credit side. So, give and take, overall, good set of numbers that have come in from SBI. Back to you.
Thanks so much, Abhishek, for that. We also have Ashitosh Mishra of Ashika Stock Broking joining us on the phone line to react to the numbers. Ashutosh, you just heard Abhishek, give his first take as far as the numbers are concerned. What do you make of the numbers? And even as we speak, SBI has cooled off from the day's highest point.
Yeah, so numbers were absolutely in best in quality for all front. If you look from asset quality to business growth to P&L part of it, everything looks quite good for the SBI. What we need to see it from here is what type of credit cost guidance for the whole year was they are giving in, and what is the fresh slippages number for this quarter. If it has come on a sequential basis substantially lower, then surely it will be taken as a more positive. And it was a more positive surprise because market was not expecting such a good number from SBI, given that the asset quality concern on unsecured part of it. But although for SBI as well as HDFC, the large private and public sector banks, two largest banks, they are not showing any substantial impact on their P&L because of this concern which is going around, impacting some smaller banks.
Ashutosh, there was also one account which they did mention that they will classify as NPA in Q2. Am I right?
Yes.
Which was that account and what was the exposure? Can you guide?
So, I don't have the ready numbers for that part of it just in front of me, but in overall scheme of the things, I don't think so that will have any significant impact for the SBI.
So it's still a better number because your credit cost is declining on a sequential basis, despite the fact that you have actually identified stress and converted into NPA already in the quarter. What do you make of the valuation that SBI is trading right now?
So valuation is very attractive, and given the scope which we have, and especially second half, we are going to see a lower OPEX led by the lower employee-related expenses. So we are going to see profit remain very strong for the whole year for SBI. And from that perspective, if overall sentiment improve in the market, the stocks can give a very good return from here.
I think the main highlight that you can highlight in this result is the deposit growth. No matter what, they have on this base grown at 4.5% sequentially at a time when deposits are actually declining for large players. They are fighting for deposit with respect to high cost as well, and still they have been able to meet the analyst expectation on the NII front. So that's a key takeaway. Other income, yes, that's helped your operating profits this time around, and they have been helped by lower employee expenses. Do you feel that they need to make the employee expenses, especially on the gratuity and other pension, going ahead, or is that taken care of in this quarter?
It has taken care of in the last quarter, fourth quarter itself. So for whole year, we are going to see a lower employee-related expenses in FY25 compared to FY24. And especially that will play out in bigger way in third and fourth quarter. So that's why profitability will be much better for it. And as you highlighted in your earlier tweet also, that system deposit growth is now picking up compared to credit. And I think with SBI numbers clearly indicating that SBI is the main driver behind it. And with the size of SBI, surely it is one of the best things.
Okay, all right. Ashutosh, thank you for that. Ms. Vaidya, your last take on the numbers before we wrap on this discussion in terms of your rating on the stock, and how did you make of the overall numbers now that we have more details?
So overall it was a strong operational quarter. We currently have a buy on the stock, and it remains our most preferred pick in the PSU space. We have a target of 1,030 currently, and we'll revisit our estimates once the call is done with in the evening. But it's overall a good set of numbers from SBI.
There is an analyst meet at 5 o'clock. After that, you may revise the numbers.
Okay. All right. Thank you so much for joining us, Ms. Vaidya and Ashutosh. And thank you, Abhishek, for reviewing the numbers today. So that's SBI. We'll keep getting more details on this one once the investor presentation is out as well. For now, we'll slip into a short break. When we come back, we'll get you our conversation with the management of Carousel on the other side. Stay tuned.